Good morning. Today is Friday, December the 9th. The time right now, Singapore is 9:57, 3 minutes to 10 o'clock. And overnight on Wall Street, we see a bit of a rebound. But by and large, I think the market is still trying to find its direction. Tonight, we have the PPI, which is the Producer Price Index. And this is the last major numbers for the week. And of course, what we are looking forward will be next week. Next week, we have the CPI, which is going to be the release just before the day before the FOMC meeting on December the 14th. And of course, that will be our time on December the 15th at 2 a.m. in the morning. And the market has already more or less priced in a 50 basis rate hike based on what the Fed Chairman Powell has been telling us about a week ago. So whether that will be the case remains to be seen, but I think he has already set the stage for a slowdown in the rate hike. But basically, the interest rate is still going to go up, just that it may not go up by the same quantum of 75 basis points, which they did for the last 4 rounds. And what may happen is that going forward, if the numbers support continue easing of the rate hike, maybe we can go into the next year with a terminal rate about between 5 to 5.25%. Currently it's at 4%. So we still have about another percentage point more to go before this is what most analysts has been saying, that before the Fed will actually hold the rate, not necessarily easing the rate. I think they will hold the rate for a while, unless of course the US economy or the global economy goes into a very, very steep recession, or there is some kind of systemic risk as a result of the illiquidity in the bond market and the shortage of dollars that we have seen over the last few months. So if there's going to be any turmoil in the bond market, yes, maybe we will have to see whether the Federal Reserve will respond by easing rate. But for the time being, there's no talk about pivot where the market is already more or less priced in. So we have to watch for the rest of the week, meaning to say for the rest of today. It's highly unlikely we're going to see any major move in the US equity market. So basically the market is just waiting for next week's FOMC meeting. So over in the S&P 500, we also see that there was this very, very shallow rebound that we saw overnight as a result of the 4 consecutive days of decline from 4,100 points in the S&P 500. So we can say that this market actually has traced out a 3-wave rally, which is very consistent with corrective pattern. So if the market has taken out this near-term support, there is every possibility that maybe this market has already peaked. But of course, like I mentioned, every year towards Christmas, we may see one last rally for the year, which is what most people call the Santa Claus rally. So whether that can happen or not, it still remains to be seen. We will have to watch the FOMC meeting. Okay. Over in the Nasdaq, we also saw a very, very shallow rebound. Market traded to a high of 12,115 last week, and then we can see the market has been coming down since. And of course, this is the weakest of all the equity index in the States. And for the market to even challenge the September high is going to be very, very far-fetched. This is highly unlikely. So if the market actually tops out, which there is a possibility because we also see a 3-wave rally here. And if that being the case, I think the first candidate to sell will be the Nasdaq 100 if the market actually gives us a direction. Over in Asia, we can see Hang Seng itself this morning has a run-up to challenge the Wednesday high at 19,737. Not quite make it, okay? At least we are still very early in the day. The highest it traded was 19,726. So not very far away, but it's quite remarkable because on Wednesday, late in the afternoon, we saw a 4.8% decline in the Hang Seng on the back that the China import-export data has shown a very drastic contraction in the Chinese economy. But by now, the market has already recovered from that initial shock, and it has actually gone back up to challenge the week high. We'll see what happens in the afternoon. So over in the Shanghai Composite, nothing very much happened. Yesterday was basically a non-event day. The market was managed to eke out a marginal low compared to Wednesday, but basically it is holding the line. So far in the morning in the Shanghai Composite Index, you can see similar pattern. You can see a very, very small bar being formed. So there is really no incentive to take the market either way. The market also traced out a 3-wave rally, okay, which hit my target of 3,226 to 3,281 with a high at 3,225.85. So this is as close as it gets. Of course, we cannot rule out a possibility of another surge beyond 3,225.85. But that being the case, it is still within my target range of prices, which I do expect some kind of selling interest to emerge from those prices. Okay, over in the Shanghai, I'm sorry, in the Nikkei 225, we saw a surge in the Nikkei this morning after the market registered a low yesterday at 27,415. This morning, we can see the market now is slightly to challenge the 28,000 handle. Currently, it's just above the 27,905. So this is basically a rebound, but the main thing is that the market actually retraced out a three-wave pullback. So on the other hand, we also have a three-wave rally here. So basically, the market is not in any kind of directional mode. It's still trying to figure out which way it wants to go. But I think very much will depend on US equity performance tonight. Over in currency market, we can see the dollar continued to edge lower last night. This morning continued to do the same thing. We can see that the current market is at 136.12. So there is a possibility the point here at 152, near 152, the pullback in the dollar may not be over. So there is every possibility market may continue to edge lower in the dollar yen. However, the dollar trajectory is a little bit muddled because in other currency pair where the dollar is the base currency, we can see slightly different kind of outlook. So again, we will have to take it with a pinch of salt. I think we cannot rule out the possibility market going down to 130. So of course, we will have to see what else happens in the coming days. Over in the sterling itself, of course, when the dollar goes down, as evident in the dollar yen, all other major currency, which are base currency, are now, of course, going up. So we can see sterling actually edge higher to 122.64 this morning from Wednesday low of 121.06. So basically, I'm already short the sterling overnight yesterday, and I want to see whether market can actually challenge and break the support line here. And if it does, my target is at 1.1780. Okay, so there is this possibility the market will come back down here. Of course, it will have to break the near-term support line. Okay. Over in euro, we have a much robust rebound overnight. We can see that this morning it went up to a high of 1.0585. Okay, this is the highest it's been since last night rebound. So the rebound in the euro is a little bit more pronounced compared to the sterling versus the dollar. So the high traded this round was 106. So again, I need the market to break this support line for the market to have potential to go all the way back to parity. I am also short the euro versus the dollar. My stop is at 106.10. Hopefully it will survive, and if it not, then I'll take a small loss and call it a day. Okay. In the energy market, we can see the crude oil continue to trade much lower. This is about the lowest it have ever been this year, $71.12 last night. So again, of course, we all know what happened this week. At the beginning of the week, we have the EU imposing a $60 cap on Russian crude oil export. So maybe that is affecting the market on a negative basis. And even though the OPEC Plus has decided to hold the production cut of 2 million barrels a day effective, no change to that. But I think the latest news that we have been receiving is that Russia has actually preempted this price cap. Russia has come out and said they will not sell any energy products to countries that impose or observe the price cap. And Russia has, over the last few months, has been doing preparation. They are not doing anything. They have basically been buying up tankers, oil tankers. You see right now the price cap can be enforced because most of the insurance that the tankers, oil tankers need when they call on port, they must show that they have insurance policy in place, and most of these insurance companies are based out in London. Okay, so unless you do not use all these Western insurance companies, you can actually still export oil. So basically, that's what Russia has been doing. Russia has been buying up a fleet of almost 100 old oil tankers, and of course these oil tankers are almost at the end of their lifespan, maybe 1-2 years left, but they are still serviceable. Of course, the risk of oil leak in the open sea is pretty high because the vessels are old. Okay, but currently Russia is using all these old vessels, old oil tankers to circumvent the price cap, because now they do not need use Western oil tankers. Okay, so China and India are buying massively the deeply discounted crude oil from Russia. So in a sense, Russia has actually skirt around the price cap sanction. So we will see whether how long they can maintain it. Market expect them to be able to go back to normal if they have about 240 oil tankers. Currently, they have about slightly over 100. So we will have to see how far Russia can take these measures to circumvent the price cap. So until then, the price of crude oil continue to suffer. The nearest it can actually go, when we look back in history, at this time last year, the low traded, there are two lows key here. Of course, the ultimate low here will be $62.43, which is very, very close to the price cap of $60. The other one is $66.12. So between $64 and $66, I think the market could find a bottom, but that means the market will have to come down quite a fair bit more before it can actually stabilize. So we will have to watch how this thing pans out towards the end of the year. Okay, but by and large, I am very, very bullish on energy prices. Purely because the fundamentals all points to an escalation in the war in Ukraine. And if that's the case, if Russia is taken out of the picture, there will be a massive, massive deficit in terms of supplies, and that could actually cause prices to actually rally up one more time. Okay, in the gold market, we can see that gold has been edging higher, but yesterday I decided that I want to exit my long position. I was actually going long the gold market going into yesterday's trading, but I now look at it after this big drop from $1,810. You can see that the market has a very, 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 very sharp drop to $1,765.50, and this caused a change of my my outlook. I think the market may actually go back down again to somewhere near the $1,725. Okay, so if that's the case, because the dollar may actually want to go up again, and if that's the case, then of course precious metal may actually pull back. So to reinstate long position near the $1,725 is a lot more comfortable than currently near the $1,800. So we will have to watch how things develop. If I don't get a pullback, then of course I will miss the boat. Then of course I will have to watch how the market develops thereafter. Okay, ideally I want to buy back at 1,725 levels. Okay, over in the silver market, we saw a very, very robust rebound last night. Now this rebound is a lot stronger than what we saw in the gold market, and I've always been very, very bullish on silver. Unfortunately, I cannot find a good level to actually enter a buy position. So hopefully, if the market have a pullback, maybe it does give me an opportunity to buy somewhere near the $21. If that happens, then that'll be great. If not, then just too bad for me. Okay. Over in the crypto market, there was a bit of a rebound this morning, but not much, but there was a bit of activity going on in the crypto market. You can see the Bitcoin this morning actually rally up. Okay, we can see this is the 1 hour time frame. We can see that the market actually rebound. So, sorry, this is not, pardon me. This is the Bitcoin. So we can see that the market has a spike up higher. But if you look at the 4 hours time frame, I think the top side is actually quite limited. The market has been struggling near the 17,300 levels. So we can say the high traded this week on Monday was 17,425. This is actually my bracket of target prices, because this is a three-wave counter trend rally. Anywhere between 17,300 to 17,660, which is my target range. So when the market on Monday went up to this level, I thought the market would have hit its target, but again, it's getting ready to come back down. But again, this morning the market actually went back up, okay, to test. The highest it's been so far at this hour is 17,305. We will have to see whether it has enough strength to go much higher. But if it cannot, then of course the market will drift lower in the days forward. Over in Ethereum, we also saw a three-wave counter rally, okay, counter trend rally going up to $1,308.21 last Thursday. So we can see 1 week ago, we can see the market actually hit my target. My target was $1,307 to $1,350. So the market actually hit my target, and the market actually tried one more time at the beginning of the week at 1,305, but it didn't quite overcome the previous Thursday's high at 1,308. So that becomes a barrier, very, very clear. There's a barrier over here, in which there are interested selling interest. So the market, as it edge higher towards this level, I won't be surprised the same selling interest will re-emerge and to cap this run. Okay, over in Ripple, we can say that the market is basically consolidating. This consolidation is not over yet. The market has not been able to move in any significant way because the lawsuit between the SEC and Ripple Lab is still ongoing. There's still no result, and until there is a resolution, the market may not know where each way to go. Okay, of course, a negative outcome will cause Ripple to collapse, and of course, a positive outcome will cause the Ripple to actually charge higher. So we will have to watch. Of course, we have no update at all on as far as timing is concerned. So over at Binance Coin, we see there's a market spike up this morning to $292.10, and this is a positive development because the market has been drifting low. I was expecting the market to drift all the way to $275 to $267. Hopefully, this is a better area to go in to buy. But this morning, the market actually takes out a minor resistance line to $292.10. We ought to see whether it will stays above this line or it will slide back again. If it slides back again, this level of prices will be actually quite ideal to pick up some more Binance Coin, which is basically a very, very stable token. Okay. Over at Dogecoin, we do not see a lot of movements. This, after all, a meme coin. There is no fundamental behind it. The only reason that it has actually rallied was because after Elon Musk took over Twitter, and there were these rumors about Twitter doing a deal with Binance to come out with some kind of payment token, and supposedly rumor have it that it will be based on Dogecoins, okay, which is Elon Musk's favorite token. We will have to see, but again, there is just no confirmation. Okay, nothing else is happening in the crypto world. So for the time being, this is all I have for you, and I wish you to have a great weekend over the weekend. And do remember to register to come for my Sunday webinar, which starts at 8 p.m. Singapore time. Go and check out my Facebook, which I will post up the link tomorrow, and then you can register to attend the event. Until then, I'll see you again. If not, I'll see you next Monday. Bye-bye.